a massive cut then for the Nikkei as that went down just over 2%, 2.1% in fact, as it ended the trading day at 21,087 points. A big swing as well for the Hang Seng in Hong Kong as that was stripped away of 2.3%, sitting at 26,918. The Shanghai Composite also falling 1.4%. Not as big as the rest, but still very momentous on the day. Let's head on over to the United States now, where Wall Street stocks have seemingly finished decisively lower. That was yesterday, with many retailers tumbling after President Donald Trump announced a new round of tariffs on Chinese goods. That early afternoon tweet announcing new tariffs on another $300 billion worth of goods. Let's get that number again, $300 billion, sent investors to the exit and left the Dow Jones Industrial Average 1.1% lower at the closing bell to 26,583 points. The S&P 500, 0.9%, while the tech-heavy NASDAQ Composite dropped 0.8%, still above 8,100 points. Let's get some market movement now according to how things are faring out in Europe and, of course, locally too. The big sectors have certainly been the questions around just how things are faring when it comes to that trade war and the impact of that then as well on the market. Now, headed off into the likes of Europe and that trading, it's been negative, and that follows through across the board, having seen the likes of the United States and Asia then fall this morning and yesterday respectively. So the market taking that into account as well and certainly not enjoying that sentiment. Let's remember that the FTSE may also get some sentiment out of that no-deal Brexit, which is expected to also come to the fore. Where exactly do we lie with that? And that's taken a back burner, despite how big a news element that is, all because of China's trade war with the United States. On the local front, it was a massive fall yesterday. Today, however, filtering through to the same mark as well. More than 1.7% at some point loss for the JSE All Share, just above that 56,000 points. Not so long ago, we were back above 58,000, and we had hoped that things would perhaps remain a little bit more positive. But negativity reigning for now, and that is, as we said, on the back of that Tampa tariff tantrum there by Donald Trump. So the industrials headed lower, of course, following 10 cents, big jump downwards as well out in Hong Kong, falling 2.9% earlier today. Even BHP Billiton, 3.1% down in Australia. So that meant that locally it was bound to suffer as well. The resource shares themselves have certainly shown some resilience of late, but today certainly not the case. The resource count is going down as that rand also continues to weaken to a 6-week low. So the margins are really, really tight across the board here. Those platinum shares as well not doing too well either. On the commodity front then as well, the rand, the gold price sitting firmly above that 1,400 mark and continues to sit in and around 1,450 in fact, while the platinum price is actually at $845 a fine ounce. The price of oil has now kicked back and taken back around $1 this afternoon. But let's remember that yesterday saw it fall for the first time in 6 days. That was a massive fall to around $60 a barrel, and now it's come back ever so slightly. $62.14 a barrel. Now, a quick look at the currencies. A 6-week low for South Africa's currency. The worst margin since around June 20 then for the currency here. Almost 4% loss in this currency since Wednesday evening. Of course, we saw the cut in the interest rates. We saw Donald Trump come out with an added tariff adjustment then as well to China, which kicks in on the 1st of September. 1468 there for a greenback, 1775 for a quid, and 1668 then for a euro. Let's get our conversation going then with Maudi Lintswano from Lehomo Capital, who joins us as well here in studio. Maudi, thank you so much for the time. Always good chatting to you. That market picture does not look good. Something to worry about for the long term?
Yeah. Look, thanks for taking me away from my screens. I mean, it's all red across the board. Yeah. And I'm really happy to be here, away from those red screens. Look, I think it's going to continue from with this volatility, especially because you've got Donald Trump on a campaign trail. Yeah. He's going to be going to different places and talking about different issues. One of it being the trade issue. He's come back again, raised the trade issue. He's going to be imposing 10% on 300 billion worth of Chinese goods. Not very good. I mean, the number one and second largest economies in the world, they're at loggerheads, they're fighting against each other. It's not good. It's not good for the global economy.
It's more tit for tat though, right? Because on the one hand, Donald Trump says that Beijing is just not acting fast enough. He's saying that President Xi Jinping wants a deal, but is just not doing it fast enough. On the other hand, Beijing are saying, yes, but you said you'd have lesser restrictions on the likes of Huawei, and you haven't done so. And the US is saying, yeah, but you promised that you'd buy more agricultural goods. So we're just going back and forth on the same issues.
Yeah, look, I think the whole trade, Arabil, is very complex. I mean, even when you look at it and analyzing it between US and China, is that he's talking trade, but there's also the Chinese saying, have you looked at the inclusion of the service? The services side, it's very complex, and it's not something that you can address, within one, a couple of months. It's something that is going to it's going to take some time, and unfortunately, Donald Trump is using it as that, weapon that he can actually fight against the Chinese, and I think to a certain degree, honestly, he's just really distracting the whole free trade, and that's how things needs to be. A lot of it is very complex. I mean, the whole, intellectual property. How do you begin to even address that? It's a very complex issue that's going to take forever.
Yeah.
And it's not helping that they are not meeting on the common grounds to try and address it amicably.
Manufacturing in the United States has certainly weakened over time because of this trade war.
Yep.
If global growth weakens, as the IMF has duly noted out not so long ago, that just means that the Federal Reserve in the United States will have to probably cut interest rates again, which is still something that Donald Trump has actually also wanted for quite some time. Is he perhaps smart in the sense that he'll find another way to get his own way in things getting done?
Yeah, look, I think, you again look at it and say, where is it really hurting the most? Imposing a 10% tariff, it's actually you imposing on the American people.
Yeah.
The American companies, manufacturers that are importing from China are the ones that are paying that price. And that's why you're seeing, that reflected in those numbers, the PMI numbers out of the United States. So in the end, America does not exactly benefit from this thing, but it's the American consumers who are really paying the price. And the president is hoping that eventually it will have an impact on China. I think what it's going to do in the long run, if it's prolonged, it's just going to shift how trade happens. China can go, back into the US via Europe, and so on and so forth. But in the short term, it's very disruptive.
Sure. Local market then, we saw the rand then weakening, 1468, its worst mark in about 6 weeks or so. We had gotten back below 14 rand, 1385 odd, and we were thinking, okay, we're off and away now to the horses and to the races here, but not to be.
Not to be. I mean, I think at this stage we could actually be heading back to that 15 rand level.
Don't say that.
It's a high possibility. I mean, given the kind of movements we've seen, we could be there by next week.
Sure.
And that's the thing about the whole noises that are coming from US and China, and of course also to do with the fact that also internally we've got our own challenges as well. We saw the unemployment numbers that came through. They're painting a very, very bleak picture about what's happening here in the country as well. So I think all things are really against the rand at this point in time, unless something really dramatic happens.
Are you getting a sense then that perhaps we're not focused as we should be on the things at hand? And I say this and worry about, we got a warning from Fitch, we got a warning from Moody's just last week. Fitch then downgrading or lowering their outlook on South Africa to negative from stable. Yes, one level below junk status already. Moody's, who haven't said anything, could come out at any point in time now and just say, we're cutting.
Not absolutely. I mean, I think you raise a very key question. And also, I've said this before, that when the whole world is going through what they're going through, we should be focusing, we should actually be really focusing on the challenges that we can address ourselves, and forget about the things that we've got no control over. And I just feel that sometimes we also self-destruct. I mean, you could take, for example, the conversations that we've recently had around the central bank, whether it should be, mandate should be changed, or we should have a quantitative easing. Is that necessary? At the point where we've got these challenges of high unemployment and the fact that our economy is just not growing, we should actually be looking at doing something which is to stimulate the investor confidence, something that we can do without even spending a rand, create a conducive environment where investors can look at South Africa and say, you know what, that's an investment destination.
And you're quite right, because it's very easy to be pessimistic and really a doom and gloom say, I suppose, in a time like this, whereas perhaps looking for those positives. The problem is, however, the resilience we've shared over the last 24, 25 odd years is weighing thin, though.
It is, and it's very scary, Arabile, because it is, and especially because previously it used to be the ruling party versus the opposition.
Yeah.
Right now, it looks like that the politics have gone into the very same ruling party. So how do you handle issues like that? It's very, very difficult. And what it does, we are 19 months into this new dawn, and things are, not. There isn't many signs that are showing some positive signs. Things are still looking a lot more bleak here.
Yeah. Maudi, really appreciate the time, but thank you so much for that. Maudi Lentwana, they're joining us from Lehumo Capital live here in studio with us, helping us to unpack that market movement just a little bit more. Now, as usual,